Well, hello, lovely ladies. It is wonderful to have you here for this FinSmart presentation, the two most important numbers in personal finance. The realities of the 21st century, from record low interest rates, rising inflation, the high cost of housing, to the precarious nature of work, all contribute to our need to take charge of our finances. One of the truths I have discovered is that many women are confident in most areas of their lives, in their career, as a spouse or parent, with their health and wellness, except they lack confidence in their personal finances. I want to change this. And I really hope by the end of this presentation, you feel enlightened, energized, and empowered with your personal finances. And that you know that by engaging in this presentation, it's just one smart step to developing your financial knowledge, skills, and confidence. And ladies, time is our biggest ally when it comes to our finances. And there is no better time than right now to become a FinSmart woman. So again, welcome. Thank you so much for joining me. Let me take a moment to introduce myself. My name is Tanya Oliva, and I am a personal finance educator, expert money coach, financial wellness advocate, and the founder of FinSmart, Financial Smarts to Live Your Best Life. I was born in Vancouver, and I now reside in Campbell River on Vancouver Island. I am uniquely qualified to serve you as a financial coach. I have the educational qualifications, professional experience, and lived experience to successfully help you become a FinSmart woman. From an educational perspective, I have a business degree from Simon Fraser University, and more recently, I completed my accredited financial counselor of Canada designation, which includes courses in personal finance, financial counseling, and a minimum 1,000 hours of client service. From a professional perspective, I had a 20-year corporate career in marketing, PR, and community investment. And most recently, in my financial coaching practice, I have successfully supported dozens of women and families across Canada. And it's really something I love doing. From my lived experience, well, this is where I bring a unique perspective. So how is it that I am speaking with you today? Well, we all have a backstory. And for many of us, this story involves money. When I was 32, I experienced a financial meltdown. This was the result of going through job loss, divorce, and the dot-com crash all at the same time. Now, this was an incredibly scary and vulnerable experience for me as the money had run out. And for the countless of people who have been hit hard by the pandemic, it was a financial shock, like a job loss, that compelled me to get my finances in order. And really, the experience was so traumatic that I vowed to make changes so that I would never have to go through that again. And I am rather proud to say that within 15 years, by adopting an effective money management system and making smart, informed financial decisions, I was able to achieve financial independence by the age of 48. It was this journey from financial vulnerability to financial security that led me to launching my encore career as a financial coach in 2019 at the age of 51. My mission, my purpose today is to help women like you take control of your finances so you can live more confident and courageous lives and get on the path to financial independence. So what is financial independence? One of the key takeaways I would like for you to remember from this presentation is that financial independence is the new retirement. Retirement based on the old paradigm of working for the same employer for 30 plus years and collecting a golden pension at the end of it is long gone. The beautiful thing about financial independence is that you can achieve it at any age, whether you're 30, 40, 50, or older. You may have even heard about the movement called FIRE, which stands for Financial Independence, Retire Early. Talking about FIRE would be a whole other presentation, and there is a significant online community devoted to it. So I just encourage you to Google it if you would like to learn more. Let me share my definition of financial independence, and it has 4 parts to it. In the first instance, financial independence is when you know everything there is to know about your finances. And this is the focus of today's presentation, because awareness is the first step towards change. Without awareness, without knowing where you are today in terms of how you save, spend, borrow, and plan for your financial future, it is impossible to know where you want to go and to be able to track your progress along the way. The second attribute is when you are able to make your own financial decisions without depending on others or relying on debt. You know, how many of us ladies have left the household finances and investing to your spouse or partner? And what about those times when we rely on debt for an unexpected expense and to get through an emergency? If there is one thing we can learn from history, it's that the next financial shock is just around the corner. And you know, we all have to be ready for it. Third, you are financially independent when you are able to achieve your personal and financial goals with empowerment, not stress. Too many people are in a situation today where their money controls them or they feel controlled by it. Being financially independent is when you have control over your money and you use it intentionally to achieve your goals. Finally, you have reached financial independence when you are able to live and work on your own terms. When you get to this stage, you can pursue a passion or a hobby without money being your primary need or motivator. And you can get off the treadmill of the 9-to-5 grind. Living and working on your own terms is the final piece of financial independence. So I like to say that FIRE stands for Financial Independence, Retire as an Entrepreneur. And that's because we are all living longer, healthier lives. By becoming an entrepreneur in your later years, you can give your life meaning and purpose as you age. And this is what FinSmart is for me, and I truly love what I do. Financial independence starts with financial awareness. This is the focus of our presentation. And as I alluded to earlier, it's impossible to effectively manage your money or improve your financial situation unless you know your baseline, where you are today. And financial independence revolves around the 2 most important numbers in personal finance, which I'm going to go into in quite a bit of detail. If you're just beginning your journey to financial security, knowing these 2 numbers is really the best place to start. I can tell you it is a very eye-opening experience. So what is the first number? The first number is your net income. This is simply your income less your expenses. On the one side, or on the income side, we have many different sources of income: employment, self-employment, side hustles, business income, investment income, passive income, and windfalls. You know, windfalls like a bonus from work, lottery winnings, or perhaps an inheritance. You know, I would like to dig a little bit deeper into the concept of passive income, as this may be a term that you are not familiar with. And passive income is really the key to achieving financial independence. Passive income is when you earn income without having to trade your time for money. You know, when your investments generate income, when your investments increase in value. Passive income is essentially non-employment income. And there are many examples. Stock dividends. This is when a company pays you a share of their profits every quarter or every year. Capital gains. This is when an asset such as real estate increases in value over time. Interest income on an investment such as a bond. And if you own a business or hire employees, you can create passive income. Rental income from real estate is a source. And you can also generate passive income through royalties and residuals. Are there any aspiring authors or songwriters out there? And nowadays, if you're an influencer or a blogger, you can earn passive income 24/7 through online sales, ads, and affiliate marketing. And of course, pension income is passive. It's something that you've paid into and are collecting in your later years. But it's important to realize that a government pension will only cover about 30% of your financial needs in retirement, if you're lucky. So we really need additional sources of an income. And in fact, experts suggest that we will need to create 3 to 5 sources of passive income to achieve financial independence and maintain our standard of living as we age. Because in pure money terms, financial independence is when your passive income covers your current standard of living for the rest of your life. So let's get back to net income. On the other side of net income of the equation is our expenses. And I like to break these down into 3 categories. First, we have the essentials: housing, food, transportation. And it is no surprise to any of us here that we are living in an affordability crisis. So it's becoming more challenging to cover the essentials with rising inflation. The second expense category is what I call the end game. And this is when you pay yourself first. This is about paying down debt and saving and investing for your future self. It is really important to remember that when you have debt, it robs from your future income. And after all, saving is future spending. Am I right? The key point is that the end game must come before discretionary expenses and luxuries that I call the extras, the third category. Going out for dinner, taking a vacation, getting your nails done, online subscriptions. These are all discretionary. When it comes to your expenses, there is a benchmark that many financial experts recommend we should be tracking towards, and it is the 50-20-30 rule. This means that 50% of your net income is towards essentials, at least 20% towards the end game, and no more than 30% on extras. After this presentation, you can calculate your net income for yourself and see how you line up to these 3 categories and benchmark. This is another way to increase your financial awareness. Understanding your net income and doing a spending analysis is really one of the first steps I take my clients through, and it sets the foundations for becoming a FinSmart woman. Let me show you an example of net income. Here we have a random example for a person based on a paycheck twice a month, and they also have a side hustle. For example, giving math tutoring to some high school students. We have the essentials, which come at 46% of the person's monthly income. The end game, which is contributing to your registered accounts and loans and debts, 28%, and the extras here at 8%. What you'll see is that they have 17% in unallocated funds, which means they can put more towards the end game or perhaps give themselves another extra that month. Now, why is net income important? Well, first of all, it helps you understand your cash flow, what is coming in and what is going out of your account at any moment in time. When you know your net income, it will help you live within your means so that you can avoid debt. It also allows you to live below your means and save money. Too many people are awash in credit card debt and have not been saving enough to secure their future. On average, Canadians have been saving less than 5% a year, when in fact it should be a minimum of 15 to 20%. Knowing your net income also allows you to create a budget. Now, I know that might feel like a nasty word, but really a budget is just a savings and spending plan. And it really is essential. For me personally, it was the game changer when I was 32, and it made all the difference in my life. And ladies, we can't do mental accounting. In our cashless, card tapping society, it is even more critical to have a budget and to know your cash flow. I want to let you in on an important truth, and that is wealthy people keep budgets. Most people generate wealth because they manage their money and they have a system in place to do that, whether it is a spreadsheet, an app, or even just pen and paper. I can tell you that it is really hard to get ahead and get off the paycheck to paycheck cycle unless you consciously and actively manage your money. And when you know your net income, you can also make smart and informed financial decisions and choices. This is equally important to your financial security. Let's be honest, with the level of consumer debt in Canada today, there are too many Joes and Janes, Henrys and Susies living a champagne lifestyle on a beer budget. What you see on social media or on Facebook is not an indication of how rich or wealthy a person is. A lot of people who make a high income are living paycheck to paycheck, just like maybe a frontline service worker. So how can you increase your net income? Well, it's simple. You either earn more or spend less. On the earn more side, there are a number of options. For us ladies, the gender pay gap is still very real. If you are in employment, I encourage you to know your worth and to ask for that raise. If you're not being paid your worth, seek out a higher paying job. And we all know the pandemic has opened up a lot of new opportunities. We can also get a second job or create a side hustle. The beauty of the internet allows us to earn money in so many different ways. You can sell your crafts on Etsy, offer your skills on Fiverr, rent out a room on Airbnb, or become an Uber driver. Another great way to earn some extra cash is to sell stuff. How many of us have things we no longer use or have a use for? There are a ton of online apps to help you do just that. We also want to create passive income. Now, I explained this earlier, and one of the easiest ways to do this is to invest in dividend-paying stocks. Now, on the other side of the equation to net income is we need to spend less. Eliminate expenses. Cancel online subscriptions. Stop paying for the gym. You can exercise for free outside or at home. For me personally, I have been doing just that for over 10 years. We need to also reduce costs. Did you know that insurance and telecommunications are highly competitive? This means you can shop around for a better deal and save yourself hundreds of dollars a year. Downsize your home. This is what I did to achieve financial independence. I moved from a high cost of living area to a lower cost living area. And it was another game changer. And many people are going to have to do that in order to retire. You can get rid of a car or cars. Have you ever thought to calculate on a kilometer basis what it costs you to run your vehicle, especially if you have a car payment? And one of my favorites is meal plan. We waste so much food, and it's not only bad for the environment, it is bad for your pocketbook. Please plan your meals and go through your pantry and your freezer before you buy. We really need to be efficient with our food dollar. Finally, I want to remind you that it is very important to prioritize the end game before the extras. By reducing your extra spend, you can increase your net income. So do-it-yourself mani-pedicures, have a potluck dinner instead of dining out, and switching to transit. These are all easy ways to reduce extras. Now that we've covered the first most important number in personal finance, what is the second number? It is your net worth. And this is your assets less your liabilities. What you own versus what you owe. You look at the asset side. It could be real estate, cash accounts, investments, or perhaps you have some jewelry or antiques that you can convert to cash. On the liabilities, of course, we have mortgage, credit card debt. Some of you may have student loans, or other debts to personal friends or family. If you were to sell everything you owned and pay off all of your liabilities, your net worth would be the total cash value of your estate. And it's important to recognize that your net worth can be either a positive or negative number. So if you have recently graduated from university or college and you're carrying student loans, it is very likely you are in a negative net worth position. Let's look at an example. Here we have a household that has assets, including cash, checking accounts, some investments, their home, vehicle, and others such as gold bars, a motorcycle, and a boat. On the liability side, they have a mortgage, car loan, credit card, and a line of credit. And the total net worth, once you subtract the liabilities from the assets here, for this household is $490,000. A very simple statement of net worth. So why is your net worth so important? Why is it one of the most important numbers in personal finance? Well, first of all, it is a measure of your wealth at a point in time, and it will change over time. And this is why it is so important to track it, so you can see how you are doing on your financial journey. Your net worth is also your best indicator of your retirement readiness. And this is because accumulated wealth is essential for retirement. We have to have a nest egg to fund our retirement because it will replace employment income when you can no longer work. Your wealth will generate passive income so you don't have to work, and it will supplement pension income from government and other sources. Net worth is important because it is key to our quality of life, our standard of living, and our future care as we age. We all want to age with dignity and in comfort. So ladies, we have to plan for our financial futures. And right now, if we are living healthy, active lives in your 50s, you can be quite certain you will live into your 90s. How do you increase your net worth? By building wealth. And once again, there are two sides to this coin. On the one side, you can reduce your liabilities, so pay off that debt, but more importantly, do not take on any new debt. And on the other side, we can increase our assets. So save money, buy or invest in assets that increase in value, such as real estate, invest in income producing assets like stocks or a business. And some of us will inherit assets or wealth, but this is not something we should depend on. Here's a question. How can you build wealth in an era of ultra low interest rates, annual inflation, and with the rising cost of living? The simple answer is that you must invest. Now, there are a multitude of investment options, and these will be the topics of future presentations, but I do encourage you that if you have any questions about specific investing topics, go to Google University, read books, listen to podcasts, or reach out to me as an expert money coach and financial educator. I would be more than pleased to help you, guide you, and support you on your financial journey. Now, why must you invest to build wealth? Here's a few reasons. First of all, interest rates on savings accounts and fixed income investments are less than inflation, much less. And when you factor in inflation and any fees that you are paying on your investments, we need to make at least a 5% return just to break even. This will help, decrease, make up for the decrease in purchasing power that inflation erodes over time. Investing is the surest way to generate passive income and achieve capital gains. A capital gain is when you have an asset that increases or appreciates in value, such as a stock or real estate. And you need to invest to take advantage of compound growth. This is when you earn interest on interest in your investments. In fact, Albert Einstein, the genius mathematician, said that compound interest is the eighth wonder of the world. Well, to help you understand this concept and this wonder of the world and the power of compound growth, I want to share this amazing graph that was created by Zach of 4pillarfreedom.com. This graph is showing you how you can build wealth of $1 million based on an annual savings of $10,000 and an annual interest rate of 7%. Now, this is very realistic based on the stock market returns over the past 50 years. Now, I'm going to review 3 elements of this graph, and hopefully the concept of compound growth will become very clear for you. Let's look at the first $100,000 starting at $0. It shows that it will take 7.84 years to achieve $100,000 in wealth based on $10,000 in annual savings and a 7% interest rate. At this stage, 78% of the 100,000 came from savings, while 22% came from the interest. Let's look at the next 100,000. When you go from $100,000 to $200,000 in wealth, you see that 51% or 51,000 came from savings, and 49% or 49,000 came from the investment returns. It is incredible that once you get into the second $100,000, how much quicker you are building wealth. If you compare the timeline, it only took 5.1 years for the second 100,000 versus 7.84 years for the first 100,000. What you are seeing is that compound growth allows you to build wealth over a shorter period of time. Now, let me drive this home by looking at the last $400,000 on the road to 1 million. When you reach $600,000 in wealth and you add up all of these future years, it takes 6.37 years to get to $1 million and to generate that last 400,000 in wealth. And this is less than the time it took to generate or earn the first $100,000. If you compare it, 7.84 years for the first 100, 6.37 for the last 400,000. In summary, this graph is showing you that early on in your investing journey, most of your net worth growth comes from savings, 78%, 51%, 38%, all the way down to 14%. And as time goes on, more and more of your wealth is coming from investment returns. It started at 22%, but by the final $100,000, 86% of your net worth growth comes from the investment returns, which is, of course, passive income. This is the power of compound growth, ladies, and this is why we need to invest early, often, and for the long term. Now that we have reviewed the importance of building wealth through investing and compound growth, I would like to share an important idea with you. The idea is this: building wealth is at the intersection of discipline and opportunity. If you look at the backstory of any person in the public sphere who has built wealth, from Jeff Bezos, Elon Musk, to Oprah Winfrey, and my favorite, Taylor Swift, having discipline and seizing opportunity is core to their stories of success. You know, they did it with a lot of hard work, discipline, ingenuity, informed risk, and they seized opportunity. And Warren Buffett is the same. He is one of the world's most successful investors and a great philanthropist. He has said many insightful things when it comes to personal finances, and he sums it up, you know, this idea of building wealth at the intersection of discipline and opportunity. He sums up this idea best by saying, we do not have to be smarter than the rest. we have to be more disciplined than the rest. And this is the truth. And this is part of my own personal success story. When you hear that 53% of Canadians are living paycheck to paycheck, regardless of socioeconomic status, there are just as many lawyers and doctors living paycheck to paycheck as there are many frontline workers. And the difference is having that discipline in how you use your money. Let me share a personal story with how I did this myself. When I was 36 years old, I came into some money and had $25,000 in cash. Now, that's a lot of money. There's a lot of things you can do with $25,000, right? I could go on vacation, buy a car, or refresh my wardrobe. Well, I chose not to do that. Instead, I decided to challenge myself to save even more so that I could purchase an investment property. So instead of having $25,000 to spend, I now had to save an additional $30,000 to buy this condo. And guess what? 12 years later, that $55,000 investment turned into $240,000. And I can also say that by saving and investing in my future self, I didn't have to sacrifice my quality of life, not at all. It just comes down to discipline and knowing what's important to you and being very clear on your financial goals and priorities. Based on my own personal journey to financial independence, I have identified 3 keys to being a FinSmart woman. The first is that you manage your money effectively and in alignment with your financial priorities and goals. Money doesn't manage itself. It is a skill that you have to learn, and it takes time, effort, and discipline. And as per this presentation, it starts by knowing your net income and tracking your net worth. We want to use our money with intention. And, you can do that when you know your short, medium, and long-term goals. The second key to being a FinSmart woman is that you make smart, informed financial decisions with a view to your future self. When you are a FinSmart woman, you think with foresight, not in hindsight. You need to make decisions by researching and evaluating your options. It's really important to take the emotion out of a financial decision and also refrain from making decisions on impulse. Remember, the decisions and choices you make today will determine your financial position in the future. And thirdly, you need to make necessary adjustments based on any material change in your life or financial situation. Transitions happen throughout our lives. We're always evolving. Changes in our work or personal circumstances can trigger a major financial decision. And we also all go through different adult life cycles, and we may need to make adjustments along the way. Getting your finances in order can feel overwhelming and confusing, but it doesn't have to be. The financial industry is in business to make it seem complex and complicated, and they make money out of your lack of knowledge and maybe your blind trust. And this is where I come in as a financial coach. I don't sell any products or represent a financial institution. I work purely in the best interest of my clients. And some of you might have sought out a personal trainer to help you get fit. Well, I encourage you to seek out a professional like myself as a financial coach to help you get financially fit and on that path to financial independence. I would now like to share a quick review of my personalized coaching program that will help you become a FinSmart woman in less than 90 days. Based on all my education, professional experience, and lived experience, I can tell you that my approach is rooted in best practices and expert advice. And I have distilled all of this into a 4-stage process that will guide and support you along your journey. And in fact, I call it bringing the A game to your finances. And who doesn't want to have their A game when it comes to anything in their lives? And for me, it's also because each stage of my process starts with the letter A. As we talked about, the first stage is awareness. And I take you through all aspects and components of your financial life so that you're very clear as to where you are today and how you stack up against benchmarks and best practices based on your current stage of life and your priorities. The second stage I call anticipation. And this is when you become very clear on your values, your goals, and your life vision so that you can use your money with intention. And this is really critical because too many people are comparing themselves to others when in fact they should be looking inward. I call the third stage action. And this is when we put into place that money management system and investing strategies so that you can take advantage of compound growth and also minimize your taxes. That's one thing that we can do with our finances is take advantage of our tax advantaged accounts, including the RRSP and the tax-free savings account. The final stage is achievement. We all want to celebrate our wins, our successes, but at the same time, we're going to need to refine our goals after a material change in our lives, or maybe just once a year, you want to look back and make sure you're still on track to what's important to you. And again, time is our biggest ally when it comes to your finances. I cannot emphasize this enough. The biggest regret that people have when it comes to their money and investing, they wish they had started earlier. So ladies, all I can encourage you to do is start now. There is no better time than right now. I would like to thank you for listening. I hope you enjoyed this presentation. I packed a lot into it with a lot of concepts that may have been new to you. The net income, net worth, financial independence, passive income, compound growth. All of these things are important concepts and they contribute to your financial knowledge, skills, and confidence. By having financial awareness, by knowing your net income and your net worth, you can begin to take control of your finances and get on the path to financial independence. And I would be so pleased to help you along that journey. My hope is to help reduce the overwhelm and the stress and the complexity so that you can be that FinSmart woman. So please reach out to me by email, phone, or you can book a spot directly into my calendar by visiting www.getfinsmart.as.me. And I really look forward to meeting you on Zoom, over the phone, or in person when the time works for you, because I will be here to support you. And I thank you so much again for being with me here today. There will be more educational presentations in the future, and please feel free to share this information with your friends, family, and colleagues. All the very best. Thanks again. Bye for now.